This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper, Goren, Holm, or any third-party service provider to buy or sell any securities or other financial instruments whatsoever. And we have an awesome media partner, Blockchain Radio, where you can catch this recording on afterwards, and you can also catch our YouTube channel. Excuse me. And today's topic is all about CBDCs, aka central banking digital currencies, and stablecoins. And while the two can have like their own separate discussions because they're whopping topics, I think they go obviously hand in hand. So we decided to create one whole entire segment. And with us, we have Kevin Mehrabi from StableTech and Sal Ternullo, right? Am I pronouncing that right? Ternullo?
Ternullo, but close, yeah.
Okay, Sal Ternullo from KPMG. Kevin, Sal, go ahead and introduce yourself so we can start with Kevin, and then Sal, you can take the stage.
Yeah, I'm Kevin Mehrabi. I am CEO of a company called Wealth Chain, which is coordinated with a couple other companies in the Tezos space through the Tezos Stablecoin Foundation and the Tezos Stable Technologies Ltd. That's a decentralized project that has to do with three main areas. One is stablecoins, assets, what we're going to probably talk most about today. And then the others are transactions through Tezos Exchange, Tezx.io. And I feel like kind of it's all culminating toward is building out this part for the Tezos DeFi space that's lending. And that's Tezos.finance, Tezos Finance, or TezFin, we call it. So that'll be the big project for Q1 of 2021, and we just announced last week that we added our second stablecoin. That's EtherTez or ETHTZ, that to accompany our first stablecoin, which was USDTZ, the first USD stablecoin on Tezos. And any day now, we'll be launching TezX Bridge, and that would enable very less frictionful transactions between ERC20 tokens and those stable coins and ETH itself to these stable Tez coins, ETHTez and USDTez, and more that'll come later. So
cool. And what are you drinking?
Coffee.
Show us, because you're no.
Well, now it's just a little milk in it, but fine.
All right.
I'm fancy.
Nice. Oh, fancy. Okay.
Yeah.
Sal,
it's not instant coffee. It's not your Keurig cups. Like
you quality press.
Yeah.
Tezos, okay? It's French. You got to rap, right?
Nice. Sal, go ahead.
Awesome. Thanks, Adam, and appreciate everybody jumping on and taking the time to connect today. So I'm over at KPMG, co-leading our work around crypto and digital assets. I've been here for 2.5 years. Prior to that was at State Street in an emerging technologies role focused on everything emerging tech for them, which was robotics, public cloud adoption at the time, enterprise applications largely on Fabric and Chain.com and early Corda implementations. But our work over at KPMG now is focused largely on crypto and increasingly over the last 18 months on central bank digital currencies and stablecoins. And we've had, especially over the past 6 months, just a complete pivot in terms of the dynamic around both of those conversations. Obviously, being a large Big Four firm, we serve a number of traditional financial institutions, payment service providers, and critical market infrastructure, whether that's regulatory or supervisory or whatever it might be. And so it's interesting to see, kind of where we stand at the end of this year and looking at a number of the different projects that we're involved with and what the forward outlook for Q1 and Q2 looks like, which is exciting. And I think a testament to a lot of really, really hard work that a number of different product technology companies and organizations building, like Kevin and team. So it'll be an interesting and exciting start to 21. But looking forward to the conversation today with everybody.
Awesome. And just so we dive right in, I want to start by reading some headlines that I came across that have been announced across different publications over the last few months, because I think they're super critical and understanding, because we have a mix of people listening, right? Experts, the people who are just learning about CBDCs and stable coins and all that. But news came in today actually from the block that the Swiss National Bank and the operator of the Swiss Stock Exchange are actually looking to test a wholesale CBDC with commercial banks backed by its own reserves. Okay. CoinDesk reported earlier this month that Citigroup CEO Michael Corbat said his bank is helping governments around the world in creating CBDCs. The block reported that the Bank of France is experimenting with CBDCs. Decrypt reported that payment giant Visa has proposed a method for offline digital currency payments. Even the US Federal Reserve has published several statements around CBDCs. So they're well aware of what's happening and what's going on. And this is one that I actually discovered today, which is actually most interesting to me, pretty funny. Payments.com reported a few days ago that the Bahamas has launched the digital sand dollar, right? So a lot of these countries, states, financial institutions at large are experimenting with this, right? So it's a thing, it's present, it's here to stay. But I guess, and feel free, Kevin or Sal, to jump in. Why? What's the excitement behind this? Why is this so critical and picking up so much steam between different centralized banks and really large financial institutions? And Sal, you can take the lead. Kevin, take the lead. Go for it.
Yeah, I mean, I think there are a couple of reasons that those building these projects could sell the governments, those respective governments on, but it's really a combination of things. Over the years, more and more government officials have started to learn, okay, this is what blockchain is. This is why it's better for record keeping, if nothing else. It's more secure and all that stuff. But there's still a big gap between that and using it for any government purposes, just like there was with internet initially. But then it's like, oh no, now it's obvious. And then it just kept increasing over time. But really looking at the numbers and the financial incentives over this last year, particularly by mid-2020, the proof of concept, if you will, of DeFi being the future of the next 5 years is pretty well established. It grew very strong in a very strong way over time over the last year. It's continuing to break new records and break new barriers. But even up until I think, June 1st, or maybe just the last day of May, total value locked in DeFi was in the millions still. Then it hit the billions. And then now we're looking at, what did we peak at, like 15 point something billion dollars. Like the ramp up was just so quick, and it seems to be sustaining itself, and not only that, but implying that this is just the beginning. So and the growth had been anticipated by growth in stablecoins and building those assets. So now if you're an independent government and these agencies that are exploring different stable CBDC opportunities, and by the way, those that you mentioned, those headlines you mentioned, what do you also see accommodating like who they're exploring those opportunities with? Tezos. Side note, not to say that's all they're looking, but it's significant how those two interoperate and have been. But also it's how can you compete on any global market if you're a government and you're a central reserve bank or you're a treasury department of those central banks. You have to compete in the commercial and investment finance world. And if this is obviously going to be a significant future of it, and all the other signs we can talk about and sit here all day talking about, like PayPal adding it, and oh, such and such might add it soon. We can say that every day for the last 10 years. We've been talking about stuff like that. But really now it's like the proof is in the numbers. So now it's like, okay, we can either take our time and just get more confirmation of this, as we have been doing, and just again and again get more and more confirmation and realize we're behind, or we can be ahead of it. Let's get started now. So I think that's what the smart strategic governments and central banks are starting to do. When you just like a mid-cap or small-cap investment firm is going to look at crypto before the Goldman Sachs of the world, because you're more scrappy at that point. You have more of an upside.
Yeah. Go ahead, Sal. I see you nodding your head quite a bit.
Yeah. And I just, I think an interesting point in terms of like the wake-up calls, and I think they're coming not only from the true transformation of finance and how the DeFi space is playing out, but real or perceived threats from a competitive perspective and effectuating monetary policy within jurisdictions, and the ability to influence your position within a global trade system. So like the conversation always centers on the dynamic of China and the digital yuan and the implications. And I think there's been, a lot of overhype in some context over the potential disruption of the USD on a short run basis, just given how entrenched in the system it is and what it looks like to unravel that. But I think those what I would say are more perceived threats on the competitive nature with the central bank's ability to influence policy. And then the second angle that I think is very real, and that is, to Kevin's point, been proven over and over, is the ability of blockchain to just fundamentally transform how existing payment rails work, and doing so at a far more effective, efficient, frictionless way. And I think that's been proven in many different implementations today. I think a lot of the reports, coming back to some research we did with the block over the summer, like almost every report coming out of the 2020, 2019 research timeframe was pointing to clear operational efficiencies, and limitations as it related to privacy and other considerations that were not actually limitations, but more so impediments and problems to be solved for along the way. So, I guess those are kind of the angles that we're seeing on the central bank side. And then on the institutional side, it's more so, how do we think about what is the impact to our position in the financial market infrastructure of the world if different types of CBDCs evolve. And so organizations are building scenarios and plans to deal with multiple different outcomes to say, if the private sector drives stablecoin adoption, there is no USD CBDC, the Fed doesn't make progress, what's that look like? There's also the world that says the Fed goes all the way to the way to the edge and actually builds a retail CBDC based on some of the work with the DCI and some of the Bitcoin developers that they've hired there. So, organizations on the private sector side, in my mind, are really thinking about how does this play out in 3 to 5 different scenarios that have varying ranges of probability and likelihood, and how do we build a strategy that's effective and can deal with however these different dynamics play out.
Sure. So I guess the takeaway is to make a more modern paperless economy, right? That is even more prevalent, even more evident during this pandemic, right? And all the stimulus checks that have been distributed and whatnot. So I'm curious, Sal, you guys work a lot on the enterprise side, obviously, right? What does the product stack look like right now, and how is that kind of playing out?
Yeah, so it's a good question, and it's, I think, in the last year, a major and marked difference in terms of like maturity of the space is the fact that a number of different organizations and product companies have gone through the cycles with early pilots and experimentation with central banks and have refined product technology stacks that serve either wholesale or retail implementation models, which often does not at this point focused on the ledger system. Like there are obviously successful pilots on now 3 primary permissioned ledger systems, and obviously also gravitation towards permissionless adoption, Tezos being in the conversation frequently when we're having these discussions. So our point of view, and again, the views I share today are mine, but kind of where we're coming from is thinking, based on the work that's been done in early implementations, we'll probably continue to see progression on the permission blockchain side using Fabric, Quorum, Corda, from the vendors that are driving those products technologies around the underlying ledger. And in the future, we'll probably see a gravitation towards permissionless networks. It's a proving point, and I think once we see a tip and some central banks actually start actively building on a permissionless protocol and using that live, and maybe Kevin could correct me if that's happening today and I haven't seen it. I think we still think that's several years out.
I saw you smirking for a second. What do you know that we don't?
I don't know anything about that. Everything I hear is the same when it comes to the central bank digital currencies, which is that there are explorations going on. I think when it comes to, because there are like two sides to this. It's like we think of governments, we think of like their adoption and embrace, and like with central bank digital currencies, and we think of their regulation and how much they're going to hold things back or doing so unknowingly. Both are exploratory in the end, because they're afraid to jump too fast, too quickly. But then it just comes to the point of like cost benefit. It's like, okay, even if there's a 5% chance that like there's an opportunity here, we're a central bank, we're a central Federal Reserve or something. It's like, how much of our budget are we going to commit to being prepared at ahead of this so that we actually come through it in the right way? But then it's like, at what point it's like, okay, now we're going to act on the recommendations because this is right. How do we know that? Maybe it is right for the moment, and then things change. You know, like you need leadership that's also very much coming from this, that understands how it works. So I don't know, which at this point it's like, unless Andrew Yang becomes, you know, Treasury Secretary or no, Chairman of the Fed, like I don't really see that happening too soon. They want to let things prosper. They want to let things kind of grow on the independent private sector end, but like they're watching that just like as a trial study, right? Like why not watch that in these little micro economies that are independent of our federal bubble, which is very consequential to all of our careers as politicians and you know, government workers and everything, and to the country. And you know, what if there's no turning back on this? We want to get it right. I don't think we got it right any other time in our history when we altered our currency. So how do we know we're going to get it right this time? So like, you know, there's that kind of fear and just inheriting the problem, which is always the case that stymies a lot of progression on a federal level, despite how you know, progressive certain jurisdictions can be. But you know, so we'll see how it goes. I've been seeing the same headlines for those same countries since like the spring. You know, I'm just like, okay, well, what else? Where are you going with it?
Right. So you guys kept name dropping Tezos, obviously in the development mix, right? And different currencies that these institutions are looking at, right? Why? And I asked this as like as a person stepping outside of the crypto space, to which I live and breathe every single day, right? But why Tezos? Why is Tezos that one thing that a lot of these institutions, Sal, that you mentioned, there's been development around Tezos, and Kevin, you're seeing being like a Tezos, I want to say like positive freak, right? You have the poster in the background, you're building on Tezos. What is it about Tezos that is so interesting to these institutions?
I wrote about this like in 2019, that was like my biggest article, was why financial institutions love Tezos. They just might not know it yet. And really, I mean, I think I can even reduce what I said back then. So just, if more than anything else, it's the on-chain governance. It's the knowledge that this organization, this community, this connection of developers and nodes, this code base and the applications, of course, built on top of it, they won't be at risk because there's some risk, or by extension of the risk of hard forking the network, hard forking the blockchain. Because even if it's just like a few developers here fork and move on and that becomes some other thing, well, sometimes the whole trajectory of your blockchain project depends on a couple developers, you know? And if it's something like so weighty that they're willing to hard fork, then maybe that shows problems with the underlying blockchain. So this is, you know, it makes the whole asset volatile to build on top of a hard fork prone blockchain. And it's very difficult to mitigate that risk and at the same time say, no, that's what democracy is. No, it's more just like there's no government and anything goes, you can do whatever you want, which is a good thing, first of all. Fragmentation, hard forking is a good thing because it does have some benefit of spurring off innovation in innovation areas that wouldn't otherwise prosper. It allows for that independent initiative, but it's also the most volatile, turnover-y, you know, more prone to not lasting than anything else. But on the other end of that, just like in every industry, like our smartphones, we have, you know, like an iOS ecosystem, something counter to the fragmentation prone system, which would be Android in this analogy. And it's like, and there's a trade-off there. It's like, but there's the good part of it is that it's this united ecosystem that can move together. Now, as opposed to being controlled by a single company, it's nonetheless more democratic because any baker, any validator of the network can propose a protocol upgrade, change the whole identity of the blockchain, right? And people can vote on it. They can discuss it in a democratic fashion. There's an exploration period where it runs on testnet, and then ultimately a general vote with all the bakers. And it's not just, yes, and proposals can be rejected as well, but a person who puts out a proposal for a protocol upgrade that gets rejected is not really in a position to hard fork. Just like somebody who loses an election or a policy proposal isn't going to break their association with the United States and secede their territory. It's just part of the democratic process. If you believe you're right and your protocol proposal was rejected, well then history will show that, and then you'll have gained political credibility to fight the next day. So there's some capital there that exists and keeps going no matter what happens. But really Tezos is the only thing that does that. And those that are trying to do some sort of an on-chain governance system or claiming that, I feel like they're missing the point in that it's not really done like in a necessarily democratic fashion. So that the strength and the growth and the largeness of the Tezos community right now and going forward, creates a sense of network effects. In that, like, you wouldn't hard fork it or do a new on-chain governance thing, because that's kind of the point, that it's all united in one ecosystem. So it's like, I don't know if Ethereum is going to be around and be the Ethereum of I know today, tomorrow, if I'm a financial institution, but I know Tezos is going to be Tezos. That is, I think, underlies everything else, because even if you were to say, well, this technology isn't there yet like it's on Ethereum, and that thing isn't there like it's on Ethereum, we could say there are many things Tezos has that Ethereum doesn't, but the point is that can change because of the on-chain governance. That can change, and not at the will of one person or a group of people or people who are just sort of backward, back-end influential in what they say is a democratic system. This is actual democracy, and it keeps getting more decentralized. The protocol proposals are coming from more groups and working together. And we're getting more efficient at it too. It used to take like 6 months for another protocol upgrade. Now we did the Delphi upgrade, and then now we're jumping right into Edo, and we're in the middle of the Edo vote right now. So it's pretty cool that and I think more and more people are seeing that over time, and then that just keeps the network effects going.
Yeah, Sal, I see you nodding your head, smirking. Well, I feel like you have something to add to that.
Oh, no, I mean, I think Kevin's perspective on Tezos in terms of adoption and inclination is going to be far closer than mine. Naturally, being at KPMG, our viewpoint on the enterprise institutional side is a little bit, more conservative, just based on the nature of organizations that we work with, us being one of those. So, the only thing that I would say is in my purview of kind of the Tezos discussions has been on the product technology side from the organizations that are building, in some cases, ledger agnostic approaches, but with a strong affinity and inclination towards Tezos on a forward basis. And I know that some of those product technology companies have deep roadmaps and pipelines with central banks doing largely continuation of exploratory work, but some pivots towards productionalization. So that's the angle through which I've seen Tezos is on the technology product side, serving central banks, and Tezos being part of that conversation. But I would say that the viewpoint that I painted before in terms of timelines for permissionless blockchains and central bank digital currencies was aggressive, if anything. I think realistically, we're on a 5-year run until we see that type of real experimentation in a meaningful way. And it would still only at that point be experimentation. My personal view is probably more a decade away from having central bank digital currencies operate on permissionless public networks, if they ever go that way. Mm-hmm. I think it'd likely be a hybrid implementation model where they own and govern their ledger system within node infrastructure that they control within that banking system, and then can probably write or interact with public chains to leverage the immutability and state functions of those networks. But even maintaining a higher degree of governance over critical functions like minting and burning is something that I think is going to continue to be a requirement of the central banks in the future. And the governance piece will determine how far governance comes on public networks will determine the likelihood of central banks to use them if they can effectively govern and control all of the facets of the system that they need to. But I think right now they feel a lot more comfortable, obviously, given the state of adoption and the ledger systems and implementations that people are pursuing with permission chains. So.
Interesting. And this kind of like obviously dives into the stable coin side of things. Both topics, like I said in the beginning, go hand in hand, right? So I kind of want to dive into that side considering the time we have left. So obviously stable coins, they can be a discussion focused on volume growth, use cases. We can dive into that. But I want to talk more, Kevin, you talk more about the DeFi projects happening, right? And you also recently made headlines with StableTech in Decrypt. Was it this week, last week?
Yeah, last week.
Last week. Tell us more about that.
Yeah.
Before I kind of dive into various other topics.
Yeah, one more, just to put a pin in the CBDC stuff that I was on, just before I forget. Like I would say, look at the small like island countries to be the first ones to adopt it, the ones who have the lowest at risk, and just like they're so much more nimble. They can try this stuff out, and they have more upside from those who walk in and say, hey, let's do it. Like, yeah, sure, why not? And then that'll be like a test run, I think, for larger and larger nations before necessarily France or Germany or the United States will start doing it. That's all.
AKA the Bahamas.
Yeah. But even the Bahamas might wait. So like, wait for like the Marshall Islands or Micronesia or, one of the M's islands.
Yeah.
But yeah, so yeah, Ether. So yeah, we have so StableTez is the family of assets. These Tezos stablecoins. The first of which came out in May was USD-Tez, and this is all built on the Tezos standard. That's FA. You have ERC standard, usually ERC20 standards on Ethereum. On Tezos, it's FA. FA1.2 is pretty dominant. Now we're moving towards FA2, and these are all backwards compatible with each other. So, yeah. So, but EtherTez is the second coin, and that's going to enable trading on the same systems that USD-Tez is traded: Dexter.exchange, and QuipuSwap.com, which is coming out. Should be any day now as well. Yeah, they've been going through a security audit, and that's wrapping up. So that'll be exciting to see two exchanges on Tezos finally. And it's way more than just the sum of its parts. It's like they interact with each other in a way that's fantastic. But yeah, so EtherTez, it's ETH backed, and you mint your ETH by depositing ETH, and then it's the minteries, which are trusted Tezos bakeries that have these stores to mint. That are facilitating it. They'll also be supplying to TezX Bridge, which will bridge between ERC20 tokens and FA1.2 tokens or FA tokens, and as well as ETH to ETH-Tez. So that'll be the way that most people get it on a primary level, and then take it to QuipuSwap or take it to Dexter Exchange, add to a liquidity pool, which is the first yield option out there on Tezos DeFi right now. And yeah, that's been actually growing a lot too, the XTZ USD-Tez liquidity pool. And so we'll have a XTZ ETH-Tez liquidity pool, and you'll be able to trade between XTZ and ETH with the existence of that pool. Or if you're bullish on both, or you want to hedge your bets on each other, then it's probably a good idea to buy an equal amount of both and put them in a liquidity pool, because even if you get impermanent loss, you're up in one, or like you want to pull out in the middle of impermanent loss. But if you believe they're both going to be traded against each other a lot, then I would say hold on to it, keep it in the liquidity pool, and then you'll accumulate a lot in fees, fee revenue. And then of course, USD-Tez and ETH, so you can just long or short the price of ETH to US dollar. And we'll be following up with BTC-Tez soon, even though there is a TZ-BTC out there, but that's not associated with us. Gold-Tez, and that'll start the minerals family, as well as Euro-Tez. So if you want to see them all, they're at StableTez.com right now. But yeah. So if you haven't tried Dexter Exchange, I'd say go do it now. well, not now, but after this.
Yeah,
Dexter.exchange.
after
Yeah, and then there are a couple wallets you can use.
Yeah,
On a mobile,
go ahead.
you can get a Magma wallet. So as you watch this, you can just go on your mobile device and get a Magma wallet as well. And then that already has Dexter integrated in it. So make things easy. That's relatively new as well. So
cool.
We'll be an early adopter.
A lot of updates, a lot of new things.
Yeah,
but the Wrap BTC was the one that I guess I was referring to that made most recent headlines. So congrats on that. And EtherTez, not Wrap BTC, EtherTez. Excuse me.
Yeah, Wrapped
ETH. I was imagining it, but said it differently.
Yeah.
Thank you. Okay. So stable coins obviously picked up a lot of steam in terms of usability this past summer with DeFi summer, right? And all these different interest generating protocols and the yield farming and all these other clickbait buzzwords that occurred over the last few months, right? But one of the most interesting and most compelling stories that I've come across actually came out today that I want to read and share with everyone. And this kind of involves Argentina's financial crisis and how its locals kind of want something linked to the US dollar and are looking for ways to safeguard the value that they currently own from the inflation that's occurring, right? Which is actually increasing at a whopping rate of 70% within the last 18 months, okay? So actually what they're doing is, because they're only permitted to buy at a maximum of $200 from more official channels, and that $200 is in USD, right? They're also being taxed on that 65%. So they're leveraging all these Argentinian-based exchanges to purchase DAI, leverage DAI as a form of currency, right? And exchange between one another, which is a real tangible use case that you're seeing in foreign countries, right? Obviously, this isn't something that's going to be happening in the US anytime soon because Argentina's economy is not as broken as the US economies, or at least not yet, depending on with all these stimulus bills and whatnot. But talk to me more about these more mainstream use cases, more of these compelling use cases. And Sal, I kind of want to hear from you what you guys are also doing on the enterprise side, because I know you guys also released, what's it called? KPMG Chain Fusion, right? And I don't know if the two are interlinked because you guys are working on different public or private chains. Kind of tell me more about that and where stable coins come into the play.
Yeah, happy to do that. And Chain Fusion is related on the enterprise side, like integrated in context and theory to support stablecoin adoption as well, but focus primarily on crypto. So, you know, as we look at the stablecoin space, the move that we're seeing is largely from, and the use case that you painted out, I think, is a great retail-centric case based off of geopolitical and economic considerations in a specific country. The narrative in Argentina and Venezuela has played out in different ways and in certain, over the past 4 years, it's been in the spotlight, specifically in Venezuela, and I think that's going to be a continued dynamic. On the enterprise institutional side, the adoption curve is really looking specifically at how do we optimize existing payment rails if I'm a payment service provider and using stablecoins. I think the Visa news for the integration with USDC is a huge moment in terms of what the forward outlook for adoption may look like. And I think there's a lot of organizations in that payment space that are thinking about, what are the implications of stablecoins on my business and how do I prevent disruption, but also potentially lean in and think about how my market position might effectuate a strategy to participate in the space in a more meaningful and innovative way. But in the context of Chain Fusion, which you pointed to on the backside of this, it's a crypto and digital asset accelerator suite that we've built on top of different product technology companies, solving point pieces of problems that institutions and enterprises face when they're adopting digital assets. So we've integrated, have a strategic alliance with Coinmetrics, which is a leading data company for network market and index and reference rates. If you don't follow Coinmetrics State of the Network newsletter, it's, in my opinion, one of the best independent data-driven perspectives on network conditions and capital flows and things that are happening that you can kind of scrape from a public data perspective. So I'd recommend taking a look at that. But we also have partnerships on the custody technology side, as well as on the on-chain analytics side. So really pulling together in a consistent architecture all of the core components that you need to spin up a regulated business interacting with digital assets, and building on top of established, mature third-party product tech. So we're not trying to go and compete directly with Unbound and Firebox and Curve on the MPC custody space. We're integrating those technologies underneath the Chain Fusion architecture to serve our clients based on, their preference for, which might be driven from a number of different for a number of different reasons.
Got you. Now, do you guys envision these central banks adopting their own stable coins, like creating their own stable coins, or kind of leveraging DAI or USDC to leverage the power of the transparency, the low cost, or would they just create something out of thin air? Thin air being create something of their own.
I think, it comes down to the use case being mostly institutions over the next several years at least, and not because like they couldn't be used for getting your money, getting your coffee at Starbucks, but that there would be middleware to take care of that step, so that the recipient gets paid in whatever type of asset, in whatever form they want, but the sender can pay and get something debited out of their crypto account, so everybody gets what they want in that. And then so that's been around for a number of years, the ability to do that. It's just that we haven't seen that integrate so much yet with like Square or those things. But once that, or Verifone, but once that is the case, it's being used. But we already have like a digital currency. Like it's called the currency we already have. When you move money from someone's Venmo account to another, it's not like somebody on the back end is taking money out of a vault, with money with your name on it to like somebody else's vault. It's not happening. It's just it's always been a ledger. It's just this is a blockchain-based ledger. I think this is like how I explained it, I think, to my parents, so they finally understood. They're like, wait, so do I have to like pay for stuff in a new way or what? Yeah, it's like, no, you're just going to do what you've been doing. Nothing's going to change on your end. It's going to be the same digital ways you communicate. It's just the stuff underneath is going to be different, but you're not going to care about that anyway. They're like, oh, okay. And then they just start thinking about every technology transition that was modular that they had ever seen in their lifetimes, which was 1 million. And then it's like, oh, okay, yeah. TVs were deep once, now they're flat. Okay, it's still TV. Right? What the hell do I care? I'm still looking at this side of it.
Right. No, I hear you. That's a good point. So I wanna dive into the QA for a moment, and this one specifically for Sal. Okay, so which is getting more traction or speed? And I'm assuming it's on the side of stable coins, the institutional or retail banking side of things.
So until recently, until maybe the last 12 months, it had largely been driven through a lot of sophisticated crypto native organizations that were trading, making markets, starting to contribute to the rise of kind of the summer of DeFi. And so you saw the massive growth, 500% in terms of stable coins issued this year, leading over 25 billion now. And then I think on the institutional side, it's really just been more recent. Again, I come back to the Visa and USDC headline, like that's a significant moment in terms of alignment and movement forward. And I think the PayPal move in partnership with Paxos, providing, and I know that Kevin pointed to that, everyone points to that, but in terms of making this real for your parents, the number of people that I've engaged with over the past 6 weeks that know how to use PayPal, can operate in PayPal, don't have to go through a KYC verification process again for any other application and or any other download. Like the easiest user adoption experience is taking something they have today, using it exactly the same way with the exact same experience, but allowing different optionality and benefits to the user. And so, that Venmo, PayPal UX dynamic is going to be a significant driver in terms of the adoption curve. And that's going to come largely on the retail side. So I think now we've kind of hit this point in the maturation of the space where there's significant institutional adoption, and we can talk about that all day. It's the premise of our business, but the retail side is explosive. And that's not only evidenced by the edge of exploration in DeFi, but by adoption of fintech companies serving generations outside of those that may, align most closely historically with crypto.
Interesting. Before we wrap up, I want to kind of give you guys a chance to say more about your companies. Where can we learn more? Where can we find you online? We can start with Kevin and Sal, and then go to Sal. Kevin, go ahead.
Yeah, you could follow me on Twitter. It's at Mehrabi. Just go by my name. Stable.tech is where most the projects are. Well, that's kind of the gateway to all the projects we've been working on. And wealthchain.io is my company's site. ETHTES is coming out. Well, it's out now. We'll start to see stuff populate with it this week. And then USDTES is always available. If you want to mint ETHTES, go to Mintery. You can go to, I'll put the link in there, usdtes.com/. Oh, okay. Yeah, you can go there and then find a Mintery, use them. They're good if you want to get a significant portion of the liquidity pool on Dexter or QuickSwap. That's who you go to. So,
cool. Thank you, Sal.
Awesome. So easiest way on anything work related is LinkedIn. Sal Ternullo names there. You guys can follow up and message me if you're interested in connecting. And then obviously at KPMG pushes everything for coordinated homepage. If you guys want to dig into the stuff that we put out on crypto thought leadership, central bank digital currency, stablecoin adoption, all the stuff on Chain Fusion is there. All the stuff on our relationship with Coinmetrics and the co-developed product that we're building, which is a selfless show. I think we're super excited about what we'll announce in January. It's going to be a major move in terms of looking at networks in real time, understanding, risks as it relates to, mining pools, as it relates to just behavioral conditions around the consensus process, and understanding what is essentially settlement risk on public blockchains, but doing that proactively and in real time. So more to come on that in early January, but everything's on the KPMG homepage. And again, for me, LinkedIn is easiest.
Perfect. And guys, thank you so much for your time. Thank you so much for sharing your knowledge, for discussing more about stable coins, more about CBDCs. And before I let you guys go, for everyone that's tuning in for the first time, I want to kind of take you in through the next part of Blockchain and Booze, which is actually my personal favorite, the networking session. So before I let Sal and Kevin break off, right now I'm going to end presentation mode, and we're all going to distribute to these really colorful tables where we'll be able to bounce from chair to chair and meet for everyone that's been tuning live to Blockchain and Booze today. But before we do, you got to make sure you have your cameras on and your mics on the second I end this presentation mode. So cameras on, mics on, otherwise you're going to be really confused. Guys, thank you so much, and we'll see you next week, which is going to be the last Blockchain and Booze of the year. So we're going to do a really fun one with Alon, Joseph, and the Draper, Goren, Holm team. We're going to do a holiday-inspired one. We want to hear from you guys. So be sure to come back next week, and we'll see you soon. Sal, Kevin, thank you so much.
Thank you.
Thanks, Kevin.